Welcome to The Real Money Show. My name is Jeremy Weisner. I'm joined with Jerry Correia, the number 187778 Silver, and the website guildhallwealth.com. We're going to be talking about all things physical in terms of precious metals. We may get into some natural fancy colored diamonds because it's been a little while since we spoke about that and what's happening in the market there. We've got an update from the Fancy Color Research Foundation. But in terms of the physical market, it's still kind of tough out there. I have to admit, Jerry, you and I were just talking before we jumped on air that we're kind of beat. We're feeling a little burnt out right now.
Yeah, as far as like setting expectations, we don't know. We don't know when the silver situation will normalize for us, where we're used to selling, putting together orders. They're larger orders, 10,000, 20,000 ounces of silver orders. We're kind of stuck at, booking 500-ounce orders for the registered plans at this time, hoping to get some physical silver available in the next few days. But, it's tough to predict.
That's been our sort of personal saga, which is getting physical product into the registered accounts. We've started to see some product coming back in for retail, which is great to see. It could get wiped out again pretty quick if there's another run, and I think that's something we should discuss today, which is the market seems it's steady. It seems a little quiet. I think we have to talk about what's happening under the surface, because it's okay for markets to take a bit of a break. But while we're getting some product finally being shipped in because throughout the beginning of February we were ordering, and finally the product's starting to arrive.
Yeah.
So we were able to handle the orders back in early February and all through February and at the beginning of March, and then we started to get the replenishing inventory coming through. But the physical product in the registered accounts has been a bit difficult. It's been a little bit touch and go, but that's what's causing us extra work, right? Because we have to keep doubling back to make sure that we can get the products through. It's a struggle on everybody's ends. We're working through that, and we're working on some solutions to make sure that we can keep that flow steady. But it's not uncommon in the market. You've probably heard about or got a whiff of what's happening at the Perth Mint.
A lot's going on there. The chatter began earlier last week, and I took it with a grain of salt. I thought it was okay, maybe a one-off. It's probably some of the silver squeeze hype that's been going around as of for the last 2 months. But the news progressed. Unallocated accounts, not enough silver to back them up. Then the next thing you know, the Perth Mint, which has a direct retail window to offer physical silver to customers, no more silver. They shut that side of their e-store down. So all of these signs, across the world, same things that are happening here in Asia. This disappearing silver is a real issue.
Yeah, and there's sort of a twofold issue there. The one is the unallocated side of the market, right? So if you're looking at Perth Mint and you have the unallocated pool account and you decide, you know what, I'm going to go with the other guys on this. I'm going to start agreeing with what everyone's saying about I should really have it in my hand. If I can't hold it, I don't own it. This is really a time to have it allocated, but those people are being kicked to the back of the line. They are the absolute last priority in terms of getting out of a pool account.
Yeah, it's the same for certificates or any other type of derivative. Take it, call it what it is. It's a derivative for the real thing. It really doesn't exist for you. Your name is not on it. You're pretty much sharing the pool of some product, and all it takes is one big fish to come and remove that product. So, yeah, the trend now is get it while you can. Own it. I mean, obviously the best place to have it is in your persons if you can hold it, and if you can store it physically somewhere privately if you're a private individual. But you have to think about insurance and liquidity in the future. If you're with silver, you want to be able to potentially liquidate, roll it into gold, or be able to liquidate at the top. And liquidity is something that is discussed often with some higher net worth clients. But unallocated, pooled, you want to stay away from those type of gold investments.
The number 187778 Silver and the website guildhallwealth.com. Agreed. This is on the one hand, you're talking about how to get out of unallocated
Yep.
investments, if that's what you've gone for. And I would call those investments because there's counterparty risk. And if you can't convert out of it, as Perth Mint is having trouble doing that right now, I'm not saying that they won't be able to,
Right.
but that there's clearly prioritizing going on. So that's one side of this, which is trying to get from unallocated to allocated. And then the other side of this is the prioritizing that's happening on the side of the mints. We don't know the extent at which the Perth Mint is prioritizing to who. We definitely have seen over the last year that, especially as of last March, which we're going to talk about, we're kind of in an anniversary mode in terms of that squeeze in the market and the market moving down dramatically and people being, it's like the fog of war. What was going on? The price of silver was jumping down. But the fact is that there's this prioritizing issue. And we've seen over the last year that major financial institutions are clearly taking delivery of the physical product. So it's not just the everyday Wall Street bets, silver squeeze people, which love it. That is really going to drive this market massively higher. All of the new buyers into the market, people waking up and realizing, the government's been printing money and I could ignore it back in 2008, and even though interest rates never rose, that was in my favor because I was able to borrow more money. But the money printing kept going and the Fed never paid down its balance sheet. And then the pandemic hit and all of this money got created. And where was the helicopter money coming my way? And it just wasn't. So I think that there's an awakening in that sense to, okay, I don't like what I'm seeing and I want to get into the physical market. And now you're seeing so many different entities getting into the physical market that there's this constant bottlenecking and backing up. And it's how far back can you go before you've emptied everything? And that's where the comics is coming in, right? Because can't get it from the Perth Mint. I can't get it from here. I can't get it from there. So entities are saying, well, now I've got to go to the COMEX.
Yeah.
We've seen actually, I remember seeing with, when Republic Metals went under.
Oh, in Miami. Yeah.
Right. We noticed internally that major brands, major companies, we won't name them, but major companies were on the lawsuit. So they were buying the product direct from Republic Metals as opposed to getting it from the COMEX. So from an industrial standpoint, industries go to the refiners. They're going straight to the refiners. They don't go to the COMEX. The fact that the COMEX is being bled dry of physical product is a sign that that's a last resort.
Yes. Yep. And, these institutions going after the physical bullion, it is their run for insurance. They're looking for the insurance against what is coming. The rush is a sign that they're panicking. They're panicking from the immense amount of trillions in stimulus that have been printed even prior to the COVID crisis that began last year. But the insurance towards real money, not the investment. You can't do anything with the investment. This is real money, tangible. The investment is the paper. It has counterparty risks. Money has no counterparty risk. And this is primarily the reason why these banks are, bunkering down, getting as much silver as possible, and the people are reacting to this as well. People have woken up. They're seeing through the charade with the paper price raids that happen almost at 8 o'clock every other day or whatever the case may be. We're not panicked by that. We're anticipating it, and these are only opportunities. And looking from the whole the year anniversary. This is simply
what year anniversary are we celebrating here?
I don't know what you would call it.
The smash?
And the silver, the silver. Well, it's been a crash. The silver did, dip last spring. Look at where we are today, though.
I know the market went down to, we were trading in the $17, $18 range in silver, and it dropped down to $11. And they're saying now that's how J.P. Morgan got out of their silver shorts. They pushed it that far, and then they were able to get out of their shorts. I mean, that's what they're telling us. I don't pay too much attention to that because I just kind of have my head down helping people to get into the market from the fundamental side of things. But I was reading an interesting thing on Reddit with, I think it was a guy put up a post. His name was, I believe, the Happy Hawaiian, and he was talking about this idea that there really are two markets that push the market higher. There on the one side, there's the fundamentals, which we talk about all the time, because the other side of it is the silver squeeze, which is what happened in 1980 with the Hunt brothers. But it happens, and it can happen often. Not often, but it can happen in a generation, and that's what is happening right now in terms of that's what the aim is, right? The difference is, and this is what this person was posting, which was a great post, was this idea that we've gone from basically two brothers trying to do it, two billionaire brothers, to everybody. And this idea that, you know, if you can whack out just by each person buying a few ounces, can whack out the retailers, can then go to the wholesalers and then clear out the cupboards of the refiners and put that much pressure on the overall market, for better or worse, that's going to drive the market higher. I say worse because, there's industries involved and that has negative repercussions, but it can drive the price magnificently higher. Now, from our standpoint, we have more level heads.
Yeah.
We're not, that would be fantastic, but that's not what we ultimately think is why you should hold it. We're here more for the fundamentals and the driver of it. If we really did end up seeing that silver squeeze, that would be icing on the cake.
That's right.
Let's talk about that icing. In the last segment, Jerry, we were talking about the icing on the cake. What would happen if the silver squeeze actually happened? It's one thing to look at the fundamentals and say, look, silver's an industrial metal. It's a monetary metal. It's extremely undervalued. If you look at the debts, if you look at inflation, if you look at the supply-demand fundamentals, these are the reasons to be in the market. These are the reasons to hold some physical silver now. But if there was a major silver squeeze in the market, meaning these four major banks that are short half a year's of production, right? If they end up on the wrong side, and they are panicking, but it drives the price higher, how high do you think? If I hold an ounce of gold right now and it's worth, let's say, $30, $25 US, but 30 plus Canadian, could that be worth in the next 5-6 years if we get that silver squeeze?
Well, you're asking me personally.
I'm asking you personally. I'm not asking you to look into a crystal ball here. I'm just saying, what do you think it could actually?
I'm of the opinion, and I share the view of many that believe that we are headed back to some sort of a standard. You're not going to end the money printing. You're not going to cause another 1930s crash, because if you stop the money printing, the things really cease. So you're going to have to back up the system with some trust, with some credibility, and by creating a standard, maybe a 40% gold standard, back everything up. You need a revaluation of gold. So I'm of the opinion, some writers wrote $10,000 gold. And this is a mathematical figure that you need prices to be there in order to back up the immense amount of debt and even quadrillions in toxic derivatives that are on the balance sheets of these banks. So if you have a $10,000, $15,000 gold price by the end of all of this madness, because something big is coming down the pipe. It's going to be epic. And when you have gold at $10,000 per ounce, you divide that maybe to a 12-to-1 gold to silver to gold ratio. That puts silver close to about $1,000 per ounce.
$1,000 an ounce?
That's right. Well, that's the whole thing. Back in 1980, you needed 2,000 ounces to buy a house.
Okay.
What's the average house today? About 1.5 in Toronto.
Well,
So
1 million, but
1 million.
I mean, that doesn't buy you much.
Okay, yeah, it doesn't really buy you much. But if we do the math and extrapolate, we're going to have enough 2,000 ounces today for a measly $70,000, 75,000 Canadian. You can buy a house. And that's our goal here, is to decide, not only protect, but what is your plan? What is the strategy? And part of that strategy is to either play the silver to gold ratio or to roll out and to buy another hard asset.
Now, you're also talking a little bit there about the Great Reset, right? Because you're saying that the current fiat system isn't working. We're going to have to go to a new system, and that means resetting. and resetting, backing with a commodity you're saying, maybe silver, maybe gold, maybe a bimetallic standard like it started in the U.S. But you're also mentioning the idea that, people would say the myth is that, well, there's not enough gold to go back to a standard, and you're kind of also saying, well, there is at the right price.
That's right. 8,000 tons currently sitting, unchecked, but I do believe that there's 8,000 tons at Fort Knox and West Point in the U.S.
You haven't personally audited, but you're taking their word.
I don't think Ron Paul has either. But the 8,000 tons at current prices today would only be about $260 billion. Not enough. Not enough to put on a down payment for a house. Not enough to mortgage the debt, to finance the debt. You'll need prices to be north of 10,000 in order to back up the debt. So that's of my opinion. And yes, it is going to be a move away from the U.S. Federal Reserve note and back to a U.S. dollar. And Jeremy, where do you think this can go?
I mean, that would be a spectacular number, what you just mentioned. I kind of feel that, number one, the idea of $50 silver that's going to happen. We don't have to suspect that it's going to one day reach $50 again like it did in 1980 or like it did in 2011. I think silver easily going to $100 an ounce would still make it incredibly undervalued. I think people would look at silver at that point and say, what's $100, right? Especially when you compare to things, you mentioned real estate. Think about Bitcoin at 60,000 or whatever it's trading at now, with no inherent value, right? Which is the beautiful thing, because it could never be overvalued. But the thing is that, I think that silver at $70 an ounce, just as an example, I'm talking about like the first marker, the first flag, is the idea that if it went to 70, bank stocks are trading at 70. You can. I think like most stocks are trading around that type of price range. It's not a crazy big deal. So I think that's sort of, for me, the first step is let's get up to that level. And could it go to multiple hundreds of dollars? Sure. Why not? Once it starts picking up, once the reins are loose. And I think maybe to wrap up the idea of a silver squeeze is, I think that's really what this comes down to, is the silver squeeze is the idea of letting the reins off. That the four major banks that are shorting the market have a boot on the neck of the silver market. It hasn't stopped the rise, and they are panicking. And I find myself using the example of Rocky 1, especially when you look at what happened in early February. It looks like the silver squeeze, Wall Street bets, it looks like they lost, right? Well, Rocky lost. But what did it cost Apollo Creed, right? And that's the key here, is that this is about what damage it's doing to these banks and what panic it's creating to these banks that's going to end the system. And this idea of moving away from unallocated is also massive, and that's what the last few months specifically in this market have really done. Going back a year as well, people realizing, hey, I want my toilet paper or I want my gold. Call up their broker and say, hey, I want to take delivery from my gold fund. And they say, sorry, we're not going to do that redemption.
No.
Right? Speaking of non-redemptions, that's something you just experienced.
Yeah, to her chagrin, she thought she had a rather sizable RSP, wanted to move over in gold. It was an issue of trust, not getting the information that she was, hoping for at the institution that she was moving from. And I'm speaking about a new client coming on board. Not getting the answers to the questions that she was having about money printing and incoming inflation, and not getting the answers. So it was an issue of trust. So she decided to move it over. And majority of the product, or her RSP, was sitting in a fund. And we tried to do an all-in cash transfer and realized that some of the funds were not redeemable at this time due to the poor performance of the fund. And it kind of reminded me of what Jim Rickards talks about, and the reasons for undigitizing your wealth is that gold is very unique. It's that strategic asset for your portfolio, where it's the only non-financial asset, tangible, that does not require the financial system, but it is a financial asset. It's money. And he mentions that when everyone tries to head to the door in your best stock, you can be in the best stock Berkshire or Amazon. But if everyone tries to head to the door, you're not going to get out. Liquidity is gone, and you're stuck with the best. But in gold, that doesn't happen. The market is you have transparent prices around the world, traded around the clock around the world, and liquidity is never an issue. And that's why many of our clients, I don't know about yourself, but many of our high net worth clients, they can really care less about these fundamentals. Yes, they're being awoken to the silver squeeze and supply and demand fundamentals, even geopolitical issues with the Suez Canal and things like that. But their main issue is, Jerry, at the end of the day, when I need to sell, how quickly can I sell it?
Yeah, that's very true. And also, you're just mentioning, and we should get back to getting into the liquidity issue, but we're starting to see the noose on the neck of cryptos. Right?
Yeah.
There's a crypto exchange. All of a sudden, they're saying, no, we're going to issue you a receipt that we're reporting to the government your gains now. I mean, that is no longer outside the system.
Yeah, I got mine.
Right? It's no longer outside the system.
That's right.
And I think that they're going to further clamp down on that because I think they want their own crypto currency. Mm-hmm. And that's a scary thought, by the way. I mean, we should just kind of digress for a moment there on that. The idea that if the government puts out their own digital currency, and people have talked about it, the idea is, they'll just first give you money to spend. Mm-hmm. So it's like, go into your wallet, we're giving you free money to spend.
Like a drop,
and also universal basic income seems to be on the rise. It's like, no problem, let's just print money, give everything. And then you just go, well, why am I paying taxes? If money is nothing, then just leave me alone. But so all of these things are happening, and if you have a digital currency that's fiat by decree of the government, then there's nothing to say that they can't stop you from spending it.
That's right.
You go to your ATM machine one day, although you wouldn't be pulling out money anyway. So let's say you're buying something and it's declined and you don't know why. Mm-hmm. Right? What did you do wrong?
Yeah.
Did you not take enough steps? Did your Fitbit call you out to the government? It's curious how all these things can work, although with gold, it is a private transaction. And I think that's only going to be a benefit to gold as people wake up to this and realize, well, wait a minute. They're getting me on my crypto. They're getting me on my cash. The banks don't want me to have cash. They give me a hassle every time I want to take cash out. Mm-hmm. They're giving me a hassle to put it in. Yeah. So now I'm stuck with the ones and zeros of my bank account. But there is gold. So maybe there is something there in the overall global reset of this where it's like, how do we eventually bring transparency back in?
Yeah.
Because I think as well, if the last year has taught anybody anything, it's that, they've sat there and watched, well, my business is shuttered, but I can walk into the LCBO. My business is shuttered, but I can walk into Walmart. That just seems pretty hypocritical to me.
Yep.
Most people can see that. Most people can see the money printing. And so the distrust in government, for what it's worth, hey, well-intentioned or not, mm-hmm. that distrust is there now. And now they have to deal with it.
Yeah. Trust is the bottom line here. And in an age and in an era where we are clamoring for real news, real reporting, real inflation data. We're not getting this data, and people are awake. Many Canadians, and I'm really happy to hear this. That many people that are coming throughout the weeks are just something just doesn't make sense, Jerry. This money printing, Canada's economy. We just shut down the pipeline. We're 33 million Canadians. The GDP is falling, and where do we go? And they're looking to gold, and they're looking to silver, and they're seeing the opportunity, the silver lining in silver. It's making the springtime very exciting for us all.
And not only that, Jerry, but in the next segment, let's talk about the fact that the Canadian government's about to take the punch bowl away. Right? So they're going to stop buying bonds, and they're going to stop their QE program. The number 1-877-8-SILVER, the website guildhallwealth.com. Contact Guildhall. We'll show you how to get into the physical market in physical gold and silver. You're listening to The Real Money Show on Global News Radio, 640 Toronto. Welcome back to The Real Money Show. The number 1-877-8-SILVER and the website guildhallwealth.com. Why are you going to go to the website? You're going to learn about how to acquire physical precious metals for yourself. At Guildhall, we only deal in physical gold, physical silver, as well as natural fancy colored diamonds. And the idea is to start small sometimes, right, Jerry? You want to get some physical in your hand, start to understand how it works between that paper price that you see on the screen and then the physical price that it costs to actually acquire it in your hand, understand the premiums, which are higher these days, a reflection of supply and demand, no doubt. And so, yeah, you want to get some in your hand, and then you can maybe move into other areas of wealth protection, like the registered accounts. We are working diligently to get that physical product back into the market. This isn't new. We've dealt with the registered accounts not having product. We dealt with that back in March last year, a little bit through the summer. There was a period actually in the fall where there was some waiting times for physical product. And again, that's just because more and more people are getting involved in this. More and more people are demanding actual allocation of their product. We don't issue certificates. We issue a warehouse receipt with your own sub-account number on it with the listing of your bar numbers. That's very different than an IOU. This is, here it is. You know, when COVID protocols end, we're going to invite you to come and visit your product. You want to take it delivery in kind? No problem. No excess cost for that because you already own the product. You'd only be paying for your admin fee and the cost to ship it to you. But that pales in comparison to the cost that it's going to be to try to convert out of paper, and that's something that we've been focusing on today. Now, Jerry, did you see what Canada has planned in terms of taking away the punch bowl?
Please explain.
Okay, so Bank of Canada is providing guidance on how it plans to slow its purchases of government bonds as the quote-unquote economy recovery accelerates, fueling expectations. So the idea is they want to start taking away the punch bowl. They've been printing money like crazy and supporting the economy while it's all been shut down. This is, on the one hand, great to see because if they're saying we're going to stop our QE programs and our bond buying programs, which means they're telling the economy, okay, you have to now stand on your own 2 feet.
Right.
What I like about that is that says to me that the lockdowns are ending, that they're going to have a tough time going back to lockdowns unless they're willing to reverse this policy very quick. But that to me, on the one hand, is a good sign that they're going to say, okay, we need the economy to open because we've just said that we're slowing our QE and bond purchases because the economy is accelerating. But personally, I don't think that the economy is going to be accelerating that much once things are fully open. What are your thoughts there?
How can it? I mean, the damage has been done. I think, again, we have 30 million Canadians in the country. The oil is the main driver of the economy. Everyone knows our currency is a commodity-driven currency, primarily driven by oil and the developments in the oil industry. And too bad. I mean, how many of our clients in Alberta have just seen their empires dwindle? I mean, these are strong workers, a strong economy, strong-willed people. But we need the oil industry revamped and restarted. And without that, we are going to have a very, very tough time boosting our GDP.
Yeah, so I think that at the end of the day, this is the signal is there. On the one hand, they're saying, look, we're going to slow down all of this purchasing. We've got to pull back at some point. To me, I've seen this play out before in the U.S. when the Fed was trying to pay off its balance sheet and they stopped buying bonds, and they had the taper tantrum at that time, and so they couldn't unwind it the way they thought they could unwind it. So we'll see how that plays out. On the other hand, there's also now articles coming out about the fact that the real estate market is becoming overheated. The admission that it's overheated and that the government has to figure out a way to protect against that. I don't know. I see this as a very, very fragile place to be. And I think that it's, on the one hand, it's exciting where the prices of metals can go. On the other hand, I think it's so important to have the physical product in your portfolio today. For those reasons alone, you don't want to wait for the last minute to buy insurance. You have to have it before you need it. And as tough as it is to get that physical policy, as we would call it now, you still have to get it. This is not, if we're looking at the panic of COVID a year later, right? this is not the time to procrastinate.
No.
You already procrastinated. You know what happened when you procrastinated. You had to wait in line to try to get toilet paper. This is about now being fully ready. And as the central bankers around the world start talking about resets, do you want to be the one caught holding stocks that are at multi-year highs?
Absolutely not. You better come in line with these realities, some of them being negative. The realities of potential negative interest rates, of endless money printing, the derivatives that have been on the bank's balance sheets for almost 15, 20 years. This is quadrillions of toxic derivatives still on the balance sheets of these banks. The top 5 banks in Canada were not that strong back in 2009. There's a report by the Canadian Center of Policy Alternative that the banks were actually received some bailout money back in 2009. So Canadians tend to think that, well, we actually fared pretty good compared to the U.S. We actually got out of this unscathed. Oh, our banks were typically underwater, and CMHC is warning now that we have a moderately high risk in real estate. Our economy relies only on real estate now. Well, not only. A good chunk of our economy relies on real estate investment. It's time for us to diversify like the central banks. And like Ray Dalio, we were mentioning Ray Dalio spoke to Bloomberg, but Ray Dalio, a man himself who famously said, if you don't own gold, you know neither history nor economics.
And he owns precious metals.
Silver
but I
and
think
gold.
we have to try to convince him how to get out of the ETFs. Because when you hold ETFs, you're diverting your gold and silver money to the banks, and you're not actually holding it, you're not actually owning it, and so you're letting them play the games, right, with the market.
Ainsley Bullion wrote a great report on his comments to Bloomberg this past week, and them and I share the view that he has a position in the ETFs, but it'll be an extremely safe bet to assume that his personal holdings are actually in physical.
Yeah, I think that there is a place for those type of instruments, and they're probably great for trading, right? I had a quick conversation with a client who said, "Oh, my advisor said I should buy like the ETF instead because that way I can sell high and buy low, etc." And I was like, gold and silver are not trading vehicles. If you're looking for a trading vehicle, then that would be it. But you don't buy precious metals to trade. You buy it to hold and protect for the long term.
Yep.
And then there's a period of time down the road where you can start to prune the portfolio and adjust the portfolio down the road. Let's talk more about this. Let's talk about where we think the prices are going. Let's talk about the current subtlety in the market, why the market looks like calm waters right now, but what's happening underneath, which is huge. We're going to bring an article from SRSROCCO, Steve St. Angelo, and also touch on the natural fancy color diamonds market, because there was a great article from Fancy Color Research Foundation. The number 18778 Silver, the website guildhallwealth.com. Stick around. It's The Real Money Show on Global News Radio 640 Toronto. Welcome back to The Real Money Show. The number 18778 Silver and the website guildhallwealth.com. Over the last couple of weeks, it seems like the market's kind of started to go sideways, Jerry, but there's always a lot going on beneath the surface, don't you think?
Lots.
There was an article out by Steve St. Angelo, SRSROCCO Report, and one of the things he was discussing was just the monstrous eagle sales that were going on through the U.S. Mint. He was saying that according to the U.S. Mint's website, a total of 3.3 million silver eagles had been sold as of March 23rd, bringing the total for the year to 11.248 million ounces.
Wow.
If the sales remain as strong as they have for the rest of the month, we will likely see over 4 million silver eagles sold and 12 plus million from between January and March, which is a massive amount compared to what we've seen before. What that equals to, just as one example on the gold eagle side, is for the full year of 2018 and 2019, there was just under 400,000 ounces of gold sold through the U.S. Mint. Between January and March 23rd of 2021, 400,000 ounces. So the same amount of gold has been sold from the mint in 3 months that prior to that took 2 years. Now, you're doing that in a month of March where it doesn't look like the price is doing a whole lot. But the amount of product that's being purchased is massive. And so it's always what's going on beneath the surface. So while everything else is happening out there, maybe people are excited about different other investments, excited about Tesla, excited about Bitcoin, whatever it is, they're ignoring the fact that under the surface of the current price in the metals is that supply-demand issue continues to be right at the front.
Exactly. Having this conversation with people is just explaining how much of a coiled spring silver really is. Behind the scenes, there is tremendous, extreme demand for physical. And this is astonishing. In just 3 months, it's exceeded the full year of demand for silver eagles. And these are eagles. These are one of the most beautiful coins that I have seen. And this is what people go after. They're investing. These are mom and pops going after these silver coins. So while all the narrative is, what's going on with gold? Well, it's just the paper market's being smashed. What's going on in the physical is the silver is disappearing. Behind the scenes, silver's coiling, and this is going to be a tremendous and epic run in silver.
Yeah, and so the expectation of seeing triple-digit silver, I think, is there. I think that it's if you can get it. Right, it's going to be a nice asset to hold if you can get it. So keep trying to acquire your product. We're going to keep trying to assist people to get into the market as best we can, and continue to educate people in the market. Now, let's quickly talk about natural fancy colored diamonds for a moment, because during the period of basically 2004 through 2014-15, the market of natural fancy colored diamonds was completely on fire. It was a really difficult market to try to catch. It was just constantly prices rising. And that was basically because there was the expectation of inflation going into 2008, from 2003 through 2008. And then after 2008, you had the expectation of inflation through the QE. And so there was a lot of demand. And, the Fancy Color Research Foundation put out an article where they were basically saying a few key points for me. I know you read the article too. What stood out to me were two things. One, that on the mining side, they're not seeing many rough diamonds coming out right now that are actually colored diamonds, natural fancy colored diamonds. They're seeing less and less rough diamonds coming out, which is a very positive sign for colored diamonds going forward. The other thing that really struck me was that, and they've talked about this in other articles, was the fact that come 60 years from now, that's it. No more wholesaling.
Yeah.
Because there's no more mining for the diamond industry. That within 60 years, it's going to go straight to a secondary market only. So if you're thinking about generational wealth and what the natural fancy colored diamond market could look like in 30, 40 years, as we start to get closer to that end point of the mining industry for diamonds, not to mention that the Argyle mine, the 90% world's pink diamonds came from that mine, already closed in October. This is an asset to hold for multi-generations.
This is the most beautiful asset to hold for generations to come. This is generational wealth, and what I took away from this is the auctions that usually give us a determining value and the trajectory of prices going up in value. What I've realized is that the ones that actually hit the auctions are not that the lower quality diamonds, so it's not really setting a good expectation. It's actually a lower expectation for the auction results.
Outside of those hero diamonds that they
sometimes
sometimes
that's right. Yeah. So the diamonds that, for example, our clients hold, very, very high, very rare stones, high quality, would be outside of that auction and represent better quality. Well, like gold and silver, Jeremy, natural fancy color diamonds is a go-to investment, a go-to holding asset class for many, many wealthy families, including the monarchy. If we look at what they're holding land, they are a lot of gold and jewels. These are natural fancy color diamonds that have intrinsic value that cannot be printed. Similar to gold, this is an asset class that is portable, very, very concentrated, and you can pass on this wealth with ease without the bureaucratic bodies of the government trying to take your wealth through taxation. This is a very easy and seamless asset to hold, and we would love to show you how.
Talk about finishing strong there, Jerry. Yeah, these are great assets. We'll start to bring some more information about that to the program, because it has been a while. We love the natural fancy color diamonds, but obviously the metals have been very, very exciting. So it's all about physical. It's all about the fact that they could have a silver squeeze, but the fundamentals there will push the market much, much higher ultimately. Watch out for that great reset. We've seen the idea of the punch bowl being taken away from the Canadians at the same time as a overheated real estate market. This is the time to not procrastinate. This is the time to get involved and make sure that you are well protected, that you have that insurance policy. You don't want to wait for the house to be on fire before you have insurance. You have to get it beforehand. You've got home insurance, life insurance, car insurance. Do you have portfolio insurance? And that's where the precious metals come into play. So feel free to contact us, and we'll be happy to talk to you more about the markets. The number 18778-SILVER, the website guildhallwealth.com. Thank you for joining us today on The Real Money Show, and you've been listening on Global News Radio 640 Toronto.